Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a rejection at the 03 half resistance area for a pullback down towards yesterday's breakout. At this point, heading into the open, we are going to be using the 92 to 94 area as pre-market support. And ideally, if the market is strong and the strength from yesterday is still carrying through, then ES should hold above 92 to 94. Below that, the final spot is 87 quarter to 89 quarter, and a break below 87 quarter to 89 quarter would signal a failed breakout attempt, and at that point we could get some continued selling. But the primary scenario so far is to look for buyers to be active off of pre-market support, off of initial support, and again, ideally, if the market is strong enough and the strength that we saw in the market yesterday is still present, then ES should really hold above 92 to 94. And failure to hold above 92 to 94 in itself would be a early warning sign. And if the 92 to 94 zone is breaking with very weak internals and strong downside momentum and the other markets failing as well, then we'll have to be cautious even at the 87 quarter to 89 quarter. So the ideal scenario for buyers here is to hold ES above 92 to 94. On the upside, the short-term target is going to be the 99 quarter to 2100 quarter area marked as pre-market resistance, followed by the 02 quarter to 04 quarter initial resistance zone. And that's still an area where the sell side can be active, and in order to really break through pre-market resistance and especially initial resistance, we are going to have to see some strong upside momentum and some positive action on the advanced decline and some participation from the other markets. Now, so far, Nasdaq and ES have been the stronger markets, but ideally we'd like to see some participation from the Russell. The Russell has been lagging a bit. We saw a decent upside move yesterday in TF, and today we want to see that follow through that typically happens after a short-term balance breakout. So today, the main scenario is to watch the market and see whether there is enough strength for a continuation move. Because so far we can see from yesterday that we had this strong upside move, and now overnight we had a pullback into support, and responsive buyers were active on that pullback into support. So now we need to just determine whether there is enough strength in the market for a continuation higher and a retest of 02 quarter to 04 quarter and possibly a move up to 07 quarter to 09 quarter, or whether this is a bigger rejection that took place overnight near the balance area high, near the recent highs. So that's really going to be the main focus off the open, and unless we're seeing some strong signs of weakness and some clear downside momentum, by default we'll be giving more edge to the buy side, simply because of the strength that we saw yesterday, and so far these are pullbacks into support. Now, even if the downside scenario plays out, I still think that you have to be careful on shorting the market and make sure that you're getting relatively good trade location on the short side. Because given yesterday's upside move, even if we're going to fail and head lower, it doesn't necessarily have to be a complete directional move lower. We can still get responsive buyers active at support, and it can still be a bit more rotational, especially in the S&P, because the S&P is the stronger market right now. ES and NQ are the stronger markets, so they're probably going to take a little more time to fail and go down, even if they're going to fail. So keep that idea in mind too, that even if you're not seeing a whole lot of strength and the market is going down, it doesn't necessarily have to go down in a straight line, and we can still get rotational moves off the support zones. So even if the direction is to the downside, you still want to secure good enough location so that you can sit through some of the chop that could take place and some balancing that can take place to eventually hit your target. And if you're entering at too aggressive of a spot on the downside, then you may not have enough room to let the trade really work out. So right now we know that the buyers are more dominant, and we are looking at a potential balance breakout scenario. So look at 92 to 94. That's going to help us determine the short-term directional bias. Ideally, it holds above it for the buy side, but if not, that's okay. Be open to both sides. Just understand that the buyers are a bit more dominant, so we're going to have to see some more signs of weakness to change our directional view or our directional bias on the day. 87 quarter to 89 quarter is the final spot. If that zone doesn't hold, at that point we would be looking at a failed breakout scenario, and then we could see some more downside continuation. But until then, the buyers are in control, and the focus will be more on the long side, cautious on the short side, looking for a move back up towards the 99 quarter, 2100 quarter, and 02 quarter to 04 quarter. And then at that point, that's an inflection point. We'll have to see if there is enough upside strength to warrant a move above the initial resistance zone. We will have to see some decent upside momentum in order for that move to take place. Absent any strong buying at initial resistance, responsive sellers can be active at the zone. So those are the main ideas. Let's see if the buy side can hold ES up this morning, and we'll take it from there.